Hi fellow traders, I'm making this video to share my analysis of EUR/USD. So we can clearly see that market is moving in this rectangular range and we'll have to wait for the breakout. Since market has been in uptrend for a very long time, we have to be very careful while trading this to the short side. So we'll have to wait for the clear breakout to the downside, and we will consider this breakout if and only if 1 hour candle closes at least 10 pips below the lower border of this breakout. So lower border of this rectangle. So lower border of this rectangle is 1277. So we'll consider the breakout only if it closes around this horizontal line at 1267 at least. So if it happens, we can take a sell position, and there are two ways of deciding how to exit the position in case of loss. So before I talk about the take profit level, let's talk about the risk. So there are two ways. The conservative traders will rather not enter this position because they should wait for the daily closing above this previous high. And in case of waiting for the daily closing above this previous high, it will give you a stop loss of 115 plus 5-10 extra pips. So it will give you a stop loss of kind of 124, 125 pips, where take profit will be a little less than that. It will be 120 pips or even less than 120 pips, maybe 118, 117 pips. I'll tell you why I'm considering this 38.2 Fibonacci level as the take profit level, because this is going to be the next nearest significant support area. So to understand that, let's go to the daily time frame, and here we can see that the previous resistance, that swing high, is coinciding with this Fibonacci 38.2. so that will be our support, that will be our area of deciding take profit level. So this is our take profit level. In other way, we'll stick to consider this rectangle, and we will stick to trading that just the rectangle. So in case market comes below, we enter the sell position, and then again it goes back, and if it closes 10 pips above this upper bottom, that is 1322. So if market makes 1 hour candle which closes above 1332, then definitely we should not hold on to the position, we should exit the position. So our stop loss in that case will be kind of 57 plus 10 extra pips, 67 pips. Here take profit can either be the same, or if you want to exit early, you have only 67 pips on the stop loss, so you can simply take 67 pips and you can exit the position with 1:1 risk reward. So your 67 pips will already be completed at 1199 around this previous swing low. So you can decide whether you have to take the equal pips, that is 67 pips around 1199, or you can wait until here. But make sure that if it continues and it comes around this area, you will shift your stop loss to break even point, so you'll have no further pips on the risk. So this is how we can trade this EUR/USD to the downside. This is the one way. Other way is to simply do not trade this sell position, wait for retracement, because we are already in the uptrend and market did not honor this Fibonacci A, B, C, D 100% extension. There was no reaction from this area, that was 1231 area, and market went above with faster speed. Even there was no slowing down in the speed. So that's why there is a chance that market may correct a little, and correction can take place in two forms. Even if market will keep moving to the sideways for like 1-2 days, this overbought condition which we see here on RSI will be corrected, and if RSI will come back in the middle area around like 50 or 60, then it will be considered corrected even with this sideways action, and market may continue to the upside. And next resistance for EUR/USD will be 1550 area, that is Fibonacci 161.8% extension. Therefore, if you are very conservative trader, either wait for a correction either in form of retracement to the downside or in form of sideways action, and then we'll wait for further continuation to the upside by looking at the 4-hour candle, and then we can enter buy. But right now, if you want to trade this here it's your take, your decision to choose whether you want to trade this breakout of rectangle or not. If you want to if you are a kind of trader like not very conservative, not very aggressive, then you can simply take this rectangle breakout to trade to the short side, and rather than closing your sell position after breakout to the upside of rectangle, we can wait for daily closures above this previous high. So kind of 126 pips will be stop loss, and 120 pips will be take profit. Take profit is kind of 6-7 pips less than a stop loss, but okay, fine, it's acceptable, it's not very less, so you can trade in this way. So this is how I'm planning to enter the position, and I'm personally going to simply trade this rectangle, because I think if a market will go above and if it closes 10 pips above, I'm talking about 1 hour candle, if 1 hour candle closes 10 pips above, then definitely this rectangle will have no further meaning in this decision making. And again, if market comes back below and again it closes below, so rather I will take sell position again, but first I will exit. I will not hold the position. So or the best idea, my colleague and I are going to enter two different positions, which we will monitor in our different style. So we will hold half position for this take profit level and stop loss above this point, and one position as per this stop loss level and equal take profit level. So two different positions with I generally take 3% risk, so 1.5% in one conservative trade, 1.5% in a little less conservative trade. So let's see what happens. Let's see how we end up in this trade. Thank you for watching.